everyone. Today is Friday, December 11th, 2020. My name is Evan. Welcome back to our weekly stock market analysis videos. We break these videos up into two parts. In part one, we're going to review everything that went on this week in markets. We're going to look at performance, sectors, internals, volatility, and really sort of just point out everything that stands out and looks interesting. And then in part two of this video, we're going to jump into the charts, put everything into context, look at those bigger trends, and try and best position ourselves for the weeks ahead. So hopefully that sounds good to you. Let's jump into this week's analysis. Couple of the top takeaways here is we got a pop in the VIX, finally seeing a little bit of volatility, a little bit of selling pressure, first time in quite some time. So we got a little bit of pop in the VIX. We got an inside week for bonds, and they're sort of kind of carving out some interesting new structure we're going to talk about. And after all was said and done, we had some initial gold, silver, metals follow through, but we didn't really get it by the end of the week. We sort of gave back all of those early gains. So gold, silver, kind of in a tough spot right now. We'll talk about that later in the video as well. So let's jump into performance here. Right hand column is the 1 week numbers. You can see 4 out of the 5 markets we're tracking here were in the red. The only thing that stayed positive was that Russell 2000 still staying stubbornly bullish, stubbornly constructive. The last quarter of this year, this thing has been on fire. It continues to do so. Dow was down, the next best, which was down about 0.5%. S&P and Nasdaq were down just a smidge over 1%. World stocks not doing so bad themselves either, down just marginally on the week. If we look at market internals, it was a constructive week. So despite the fact that the headline numbers are going to show that, you know, the Dow Jones and SPY closed lower, the broad market, which is what market internals are essentially measuring, the average stock, did pretty well. You can see on the week we had 1,100 new highs. That is very constructive here. Those are some solid numbers. We're starting to post 300, 200, you know, in an individual day. This is the NYSE net 52-week highs minus lows. Those are some nice healthy numbers, so that's constructive to see. And even the cumulative AD line did manage to close positive on the week. We can see the percentage of stocks above a 20 SMA sitting about 55%, so finally coming down a bit from those, you know, fairly lofty 70 and 80% levels. This next chart here really speaks volumes, and it is kind of a chart of beauty here because this is the cumulative NYSE 52-week highs minus lows. So if you're kind of wondering why it's so difficult to short this market or why this market keeps going up, this is your answer. We're just seeing this broad participation of stocks hitting 52-week highs. There is money flowing into and broadly across sectors here. And when this type of trend develops here, it is very hard to fight the market. It means that there's a persistent bid underneath stocks, and it's wise to sort of participate and follow it rather than try and fight it. Of course, obviously, you know, shorter term time frame traders, day traders, overnight swings, there's opportunity on the short side, but you know, largely speaking here, the trend is higher. If we go to sector performance this week, only one sector closing green, and it is energy. Take a look at energy's 1 month return, up 26%. Nothing even comes close to that in terms of other sectors. This week it was up 1%. Everything else was negative. Communication services was number 2, almost trying to stay positive. Utilities was number 3. On the downside, real estate was the hardest hit, down almost 3%. Financials down almost 2%. Tech down 1.38%. If we look at volatility here, you can see we are getting a rise across the curve here. So basically the front month popping up to 23. We tried to get under 20 for the VIX, tried to get some closes under 20, couldn't happen. And we are now sort of bouncing from those 20s into the lower to mid 20s. You can see across the curve we kind of came out here. So not a whole lot kind of new to say here. Basically, you're getting a little bit of selling pressure, a little more fear in the market, so you're getting a kind of natural increase in VIX. That makes sense, and I don't know that there's too much else to read into it at this time. If we look at interest rates and credit, you can see yields pretty much across the curve here fell, so bond prices rise, yields fall. If we look at investment grade bonds, they were up, high yield was down a little bit, not a whole lot new to sort of add to that equation either. If we look at dollar and commodities, so our final look here, you can see the dollar index was up. The dollar index does seem to be kind of in control in terms of how everything else responds when the dollar is up. Natural kind of pressure to stocks, commodities, right down the list. So we had a dollar up, broadly speaking, equities were down. Gold managed to stay about flat. Silver lost a little bit of ground. And, despite the higher dollar, we did in fact see natural gas, crude oil, and agriculture, close higher on the week. So kind of breaking the stereotype there, and well, quite honestly, I don't know what the exact correlations are for those at this time. So that's kind of the rundown there on commodities. And if we look at the overall report card, I'll get a little bit of a mixed picture here. We've been running pretty hot. I think lots of A's. We got a C, a solid C this week. We had a couple of things that really didn't work in our favor. So equity market performance as a whole, risk sectors didn't outperform. Volatility environment is still in the penalty box. So we get a C here. Market breadth was still strong. Credit markets, not falling apart on us. So they at least give us some positive marks underneath this report card. And if we finalize here with the positioning for our two trading systems, you can see we got an increase here in Merlin. So basically Merlin, which is our more sort of intermediate to longer term, I guess depends on your perspective, trading system is about 90% invested right now across 36 positions. So it's leaned into this market, it's participating, it's buying dips, and it's putting on risk and, kind of riding the trend in stocks. If we look at Lamerick, which is the bottom system here, this is the more tactical short-term system for us. And what you'll notice is there's 12 positions on right now. So it's basically a fully invested, that's a full boat for us for this particular system. But notice we're only 9% invested, or long. So what that's basically saying is we have a fairly even shot here. We've basically got half longs, half shorts. I guess a little more of a tilt to the long side, of course. But we essentially have longs and shorts on, and it's staying pretty tactical, pretty neutral right now, playing for the short term. So that's kind of the way we're looking at this market. That's how we're positioned and how the strategies are looking at the current environment. So without any further, let's jump into the charts here. We'll be back in just a moment with part two. All right, we are back here. We've got TC 2000 open. We have our equity market grid showing right now. We got the S&P in the top left, Nasdaq top right, Russell in the bottom left, and we got international in the bottom right. That is through the ACWX ETF there. That's international stocks minus the United States. On each of these charts, we get these white dashed lines. That is price itself. And then the multicolored dots are a custom smart trend filter that we've developed. It measures price and volume and helps us determine trend strength, and basically path of least resistance, or kind of the overall bias that we want to be trading in. And we're looking at a weekly time frame. So that's the landscape here. When we look at the weekly chart on all of these markets, I've got nothing new to say. It's the same thing. We still have uptrends in place. That has been the case for multiple months now. Nothing's changed, even despite some of the mild selling we saw this week. We're going to need a lot more selling to start to challenge or break any of these longer term trends. So if you're looking at markets over multiple months at a time, things are still looking good for your case. Now, if we go down to the daily chart on some of these markets, we're going to see some things that are changing. And this is the first time we've seen a little bit of transition going on here. Markets have been kind of running away to the upside here, pretty unchallenged. But notice this week, S&P 500 top left, we're getting some yellow dots printed. So starting from Wednesday of this week, we actually got our first kind of transition down back into the neutral state since, I guess, the first day in November or November 3rd. We got, was the last time we were in neutral territory. So that's something to take notice of. Now, of course, the way we interpret our indicator here, and there's lots of ways to use it, but we still give the benefit of the doubt to the prior signal. So in this case, it was still a bull buy, bullish signal. Therefore, the fact that we're back here in neutral, we still want to give the benefit of the doubt to the buyers. That's the way we interpret it. So until and if that dot turns red, we do still think it's kind of a glass half full opportunity, if you will, for this market, but that can obviously change. If we see more selling pressure, this will certainly turn back, this will turn down, and then that, bias will change. So that's something to take note of here. We're getting a little bit of two-way trading, some chop volatility there for the S&P, and the same thing for the, for the Nasdaq. So in the top right, notice it didn't occur on Wednesday, but on Thursday of this week here, the Nasdaq went neutral. Same thing for Friday. So very similar comments here. Again, the buyers still have the benefit of the doubt, but it's time to pay a little bit tighter, closer attention, if you will, and we'll see how this starts to evolve next week. If we go to the bottom of the screen here, the Russell, no change here. So this has still been in an uptrend since the November the 6th. It's basically produced a buy signal, and there's been kind of a brilliant run that has occurred, and even the same thing here for international stocks. No change challenge as of this time. So with that said, with the trends kind of in the back of our mind, let's go to the candlestick analysis here. Let's get a little bit more granular on how we're viewing these markets. S&P 500 here on a daily chart. These are the relevant levels we've been talking about over the past couple of weeks. I cleaned up this chart a little bit, but basically this 36.39, this is, 30, you can call it 36.40. It's this general zone here is essentially the lows of today's session is where we want to pay attention to from a price action perspective. This is where we'd want to see buyers step in and support this market. And you saw exactly that today. Essentially, you got, tested right to that level. You saw a nice bounce and we closed near highs or at highs. So that's a constructive session here. You tested support and it held. This is kind of upper level short-term support. So keep that, momentum in high gear. That's where you'd want to see us hold. If we start breaking below there, down around 35.85, that's that old zone we talked about, weeks back. That's where we would pay attention to on the downside as well. So those are kind of the two upper level, places I'd be paying attention to. Right now we're holding both. We'll see how that, obviously, goes moving forward. And on the upside now, we do have some, right? So we have a couple of days now of price action of supply above us. So we essentially have, what is this, Wednesday session here, the highs, the open, those are kind of the relevant levels now where, you could look for a breakout for the trend to continue. So that's it. That's the, very short, small roadmap there. If we look at the Russell 2000, holding up better than the S&P. So the fact that it's trading and closing just off its all-time highs here is still very constructive. It's been carving out maybe a little bit more support just up here in this general zone. So you can see, you can kind of use this as your your upper level zone. If we start to lose 187, then that gets you back down into the low 180s or so and starts to break down in the short term. But until and if this, and we'll see how this range resolves, of course, then that's what I'd be paying attention to. So around 187 and a quarter, all the way up to about 192 and a quarter. If we break up or down from this little 4-day pattern here, that could set into motion something a little bit bigger. But for now, the trend is up on all time frames basically, and we're closing just off of all-time highs. Again, like I mentioned, I think last week, it's not the end of the world if some of these markets start to consolidate or pull back, even in a more meaningful way. It's healthy. It's how markets trade. They oscillate, they rotate, they rotate from up to down legs here, and we've basically just been on a very big uptrend trajectory. So a little bit of cooling off here would make a lot of sense, but obviously we'll see if that can actually happen and occur. If we look at the Nasdaq 100, this one here, there's a couple of interesting points here. So the Nasdaq 100 still holding up. This day here was a noticeable day. I'd say Wednesday the 9th. About 160%, 170% average volume was traded on this session. It was a down 2% day. It was the largest down day we've seen since early November. So it was definitely a day to take notice, and we are currently trading and holding kind of at the bottom end of that range. So if that persists, if we can't bounce back up and start reclaiming over 303, then the sellers could pick up a little more steam here and get us back into the upper 200s. Now, what you'll also notice about this level, this 303 level, the reason it's there is because it's the approximate highs from September. So this is basically where the market had this big exuberant kind of run in September. That's where it topped out. And you can see we are now sort of rejecting back below it. So that's kind of an interesting spot here. And, obviously it's just a single day event right now. It's early. Trends are still higher, but it's something to keep on the back of your mind here. If you're very tactical, if you're looking to be contrarian or hedge, it's something to pay attention to. This 303 zone, going back here, if you look on like a monthly chart or a weekly or quarterly or something long like that, you would, if this ultimately ends up being some type of top, then, that's kind of your little oops, false breakout type of play. It's super early, it's super contrarian, and I don't know that the odds are that high that marks the top, but it's, the point of these videos is to kind of keep an open mind and to outline all scenarios. So for the Qs, you can pay attention to this zone here. Ideally, if you're bullish, you want to get back and start reclaiming a lot of this breakdown bar, and we'll see how that kind of holds up next week. So that's it. That's the landscape right now. I think the Q is probably the most notable in the sense that they lost September highs, did it on some heavy volume, and we want to pay attention to see if there's any follow through or if it's just a single day event. IWM Russell still best in class right now. So that kind of summarizes the overall indices. Let's go to some other markets here. If we go to VIX, you can see we got basically a push above here. It's interesting that I don't see my indicator updating here. I wonder if volume isn't coming through. It's interesting we're not getting plots here for our smart trend filter. I won't debug that in this video, but you are getting that pop in VIX right now. Should be above the filter right now and in neutral territory, I believe. So that's something to note. And the VIX kind of coming alive here for the first time in some time. If we look at bottom right's TLT, so again, the weekly chart of TLT, the longer term chart, this is still in a sell signal for the past several months. On the daily chart, it's back above the filter. It's still neutral, but it's trying to print another buy signal here. We're going to talk about this chart in just a moment. If we go to commodities here, weekly chart for gold, silver, both still in a sell signal. Oil is in a buy signal on the bottom left. And if we go to the daily chart, gold is trying again to transition up. It's at a kind of a tough spot. Silver, same thing. We'll talk about those markets in just a little bit. Finally, if we look at sectors here, on the long-term time frame, sectors are strong, so we're not seeing a whole lot of change right now. Most markets are bullish or neutral. We've got utilities which are printing bearish. We've got real estate printing bearish. That's it. Everything else is neutral or positive. And on the daily chart, I'm sorry, this is the daily chart. You're only getting those in terms of bearish. If we go to the weekly chart, then you're going to see basically everything positive or neutral. So let's take a look now at some of these markets. So if we start off looking at TLT, then we can see that we are once again bouncing from this 154 area. So if you recall, this was again where we sold off in June of this year, and we found this this big rally kind of ensued from these lows, and we've essentially, after topping out in July, have been on a kind of a slide all the way back down to this level. We tested it in early November, and we bounced and sort of held exactly where we traded down to in June. We recently then just sold right back to this level. Looked a little bit dire here, kind of coming back to it so quick, but now here we are bouncing again. So what we have on the weekly chart now, we've got this inside week brewing, and it's occurring sort of right at a fairly kind of significant point of structure here for the bond market. This is where we've been holding now since certainly since June, and obviously you could certainly call it since March. We had this pretty crazy candle here in March. We know what was going on there. We did close below it before the Fed kind of stepped in, and everything else with what ensued there in the first quarter. But you could make a case that this is a pretty significant level here for bonds, and if we start to lose it, if we start to lose 155, then you got to imagine that's, I suppose, pretty good for risk assets, right? If you've got money kind of fleeing out of the safe haven, then you have to imagine that that equities would benefit. Of course, who knows, with the script that we've seen in 2020, you could get a bond down, equity market down type of scenario. That's usually the most painful when you don't have any place to flee to. So it's obviously in the cards, but regardless, from a TA perspective, this 155 is important. We got an inside week brewing, so it'd be interesting to see which way this kind of sets up. And of course, if you want to look at the slope of this recent downtrend, we're already kind of bumping back to it. So things are getting tight. Lots of trading in this area. Something is likely to give here in the next few weeks, I guess, coming into 2021. Maybe another tight 2-3 weeks of trading into the end of the year, and then something maybe in the cards there to directionally break. So pay attention to that. I think that's an interesting market setting up. If we look at XLU, I also think this is quite interesting here on how tight this is getting. We've been pretty clear. Utilities have been kind of the place to avoid, or the laggard, over the past few weeks. But now we can take a look here and say things are getting awfully tight here for utilities as well. It's coming back into kind of the top end of this range and prior trading range, and it's also coming into the October lows here. So with this type of wedge building right here coming into 61.84, I think this is also pretty interesting. If we start to break out of call it over 62.75, you get a nice squeeze here. It's utilities, so it's lower beta, of course, but that could be interesting. And obviously there's the other case where these things can accelerate lower, and if that happens, then that'd be kind of bearish coming back into this old big trading range. So utilities, pay attention to that in the coming weeks. Now, if we also look at discretionary, consumer discretionary here, I think this is actually an interesting kind of slightly vulnerable scenario here. This is obviously not exact, but if we're looking at the more or less the highs here from October, kind of resistance in early November, we're kind of trading right back to this point here. And, if this starts to roll over from this zone and we start to really fall back into the 150s or so, and we're trapped back in this old trading range, that could be kind of dicey, kind of ugly here for consumer discretionary. So let's pay attention to this as well. It's still holding on. Again, it's still a bullish to neutral sort of trend filter outlook right now. So, the benefit of the doubt still the buyers, but it's something to pay attention to. And last but not least, if we look at Biotech here, still really like Biotech. It's closed up like a champ, just off of its all-time highs, nearly an all-time high, ignoring the market weakness this week, and just really sort of lifting higher there and trending up. So things still continue to look good here for biotech. So that's it. That's what I got for the weekly recap there. Lots of things going on, coming into a kind of a seasonally quiet period, lower volume trading towards the end of the year. But we're starting to get a little bit of an uptick in volatility. So we'll see if that's just a kind of 1 week and done thing, or if that's going to trend into next week. So if you like these videos, don't forget to subscribe to our YouTube channel, or you can always follow us at thetraderisk.com for all of the latest videos and analysis we're posting. And I'd also love to know in the comments below, what are you watching? What did you find important this week? Anything that we missed that you want to point out? I'd love to read it below. Leave a comment and I'll get back to you. Have a great weekend, everyone. We'll see you back here next week.